What is your update on China's refractive market and recovery expectations for 2024?
Yes, the Chinese market has been an important market for us in our refractive laser business. We are the leading player in refractive laser surgery in China and are looking back on a decade of very strong growth with a CAGR above 20% for these years. However, since the opening after COVID in 2023, we've seen the market take a negative turn with a trading down to cheaper procedures, as well as an overall reduction in traffic hitting our business, our utilization of our machines, which we can measure very accurately by consumption data that we generate from the devices, from the installed base, is down in the high single digits over the summer and fall months of 2024. Right now, there is not yet a sustainable turnaround in place. The Chinese business has two seasonal peaks, the winter period around January, February, when the Chinese have the Lunar New Year period, as well as the summer college vacations, typically around July and August, where the most of the young patients, which are the overarching majority of the overall refractive laser patients, are typically seeking surgical treatments, are the seasonal peaks in that business. And therefore, the two main seasonalities of the coming fiscal year 24-25 are still ahead of us. We're currently expecting some pressure on the unit volumes as well as on the product mix. But importantly, we have plans to roll out a new product, the VisuMax 800, our refractive laser platform that has already been introduced in Europe that can do the SMILE procedure a lot faster than the previous generation and has a variety of additional advantages over the established SMILE therapy as well as over femtoLASIK that will be introduced in the Chinese market by our current expectation in the second half of the fiscal year, meaning from April 2025 onwards at the latest. And with the expected strong demand from Chinese clinics, where we already have a large number of indications of interest for that product, we expect for things to turn better in the second half of the fiscal year. And I would not write off the possibility of some growth in the Chinese market in the back half of the year, fueled by that product launch, even if the macro environment remains under some pressure. What exactly will be done in terms of consumer stimulus remains another critical point which could play to our upside. In our current planning, we're assuming a more cautious, more constrained macro environment like what we're seeing right now. Over the midterm, our position remains excellent. Myopia rates among the Chinese young are very high, sky high among academics with myopia rates of 90% plus and a more intense dislike of glasses than in many other cultures, maybe comparable to some Southeast Asian countries, to countries like Korea as well, but more pronounced than in Western countries. So our market leadership and technology leadership position in China and refractive laser continues to remain highly attractive for the future. And our new technologies will help us continue that growth story over the next years.
What trends do you see in downtrading from SMILE to LASIK in China?
Yes, exactly. The trade down in the market is also one of the symptoms or a part of the fallout of the weaker consumer environment. In the best of times, which was right after COVID, our product mix in China on our own devices was about 80% of the minimally invasive SMILE therapy and about 20% of the femtoLASIK therapy, which is slightly more invasive, but also does the job with good quality. The SMILE consumables that are used in the surgery are more valuable for us and are higher priced. So the mix is at a better margin for us if SMILE procedures are being performed. And we have moved from this 80-20 to something which is now between 65 to 70% SMILE and about 30 to 35% LASIK on our installed base. So this, let's call it a 10 to 15% negative mix change between SMILE and LASIK over the course of, call it 12 to 18 months or so, in which this change has happened into the early days of fiscal 24-25. This is costing us significant revenue because the production costs for these treatment packs, for these disposables are roughly the same, but the price is substantially better for the SMILE consumable. with the planned product launch of the VisuMax 800, the new femtosecond laser platform, we're introducing a higher price consumable again. Cannot yet disclose the exact pricing differential. It will also depend to a certain degree, of course, on market conditions, but we expect this to improve the pricing and do something to change that mix in a favorable way for us again. Not possible for me to quantify just yet, but stay tuned and we can update on it as we have the product eventually in the market.
How has the VBP rollout in China impacted IOL volumes?
Yes, of course. The Chinese government has introduced a nationwide volume-based procurement, which is a big auction mechanism for the public healthcare system for the intraocular lenses. The intraocular lenses are the implants used for the treatment of cataract. And as is the purpose of these big tenders, they depress the price of the implants. So there have been relatively large price concessions by all, let's say, players in the value chain, the manufacturers like Zeiss and our competitors, but also by distributors. So part of the pain has been shared with the distributors here. We have been able to lower our prices, but at the same time gain volume. So there's a partial offset. I don't think the equation overall is positive, but at least it's not as negative as just looking at the price concession. It was a burdening factor on our profitability in the fiscal year 23-24. Now in 24-25, the price will be stable because these contracts have a 2-year term. And we expect volumes now to catch up as affordability for intraocular lenses in China is now much improved based on the price cuts. And to give you an idea about the opportunity here in China longer term, I find it striking that China today has roughly the same level of eye surgeries for cataract as the US, between 4 to 5 million eyes per year being treated for cataract. Obviously, that's very much out of whack, because the Chinese population is about as old, if not getting even older than the US population, so should have more cataract. And the small factor that China is 4 times as big as the US gives you an idea that the demand for cataract should theoretically be a lot higher than 4 to 5 million, should probably be closer to 20 million plus in the Chinese market over the long term. There's a lot of untapped potential, therefore, in IOLs. The problem is affordability. The price cuts do some part of the lifting to improve that affordability. And with a very strong consumer brand in China, as well as advanced technology, of course, we expect fully to benefit from exploring the potential of the Chinese market, even in the presence of some level of Chinese competition, which is entering the IOL space and has already entered the IOL space in recent years. We expect to do well in the market. We also have a factory in China, in the Guangzhou, in the city or suburbs of Guangzhou, which we opened in 2021, which gives us very modern state-of-the-art production at better cost of goods sold, much better cost of goods sold versus our European and US-based production. So we are more cost competitive, arguably, than some of our peers and rivals in the Chinese market who have to export everything into China. So therefore, we look at the VBP as a near-term headwind, which can, however, play an important role in unlocking longer-term value potential.
How is APAC, excluding China, performing, and which markets and business areas are strongest?
We are very excited about Southeast Asian countries, Vietnam, Indonesia, Malaysia, Singapore. These regions are also developing very well in the refractive laser space. Also, our cataract business is developing quite well, and it's good demand for surgical microscopes in these regions. India is quite exciting. In India, you could have a scenario play out, as many economists are suggesting, where wealth creation in the middle class would be quite exciting over the next decade. And the problem for us in India in the past has been that the Zeiss ophthalmology product suite in particular, the elective procedures in cataract and refractive, require a certain level of consumer power. And because a big part of the population did not quite have that, we were confined to relatively narrow, wealthy segments. This is going to go broader as consumer power rises across the middle class of the Indian population. We're quite bullish on this if you give it 5 to 10 years with the current level of economic growth and wealth creation that we are observing, that the benefit for our products will develop over proportionally with a 30 years plus presence, direct presence in the country. We stand to benefit from this. And maybe this can be part of what reduces our China dependency within the Asia Pacific business. We're also excited about Japan. Even though Japan is a mature market, we still don't have all of our products approved there. So by just rolling out our complete portfolio to Japan, namely Refractive and IOLs, our two most profitable categories, which are in shorter to mid-term preparations for market launch, we expect more significant and more profitable contributions from the Japanese market in the next years to come. So within APAC, I can find a lot of areas to be quite excited about. Also within Europe, even though some markets have been sluggish as of lately due to the uncertainties in the political and healthcare systems, for example, plaguing Germany and France and other places like Great Britain for some time, we are seeing a lot of potential for the so far still very underdeveloped refractive laser space. The consumer power is already there. Myopia is not quite as high as in Asia, but it is rising, and younger people are heavily affected by it because many of the lifestyle factors are trending in the end in the same direction as in the Eastern countries. And what we're seeing now is encouraging. Refractive chains are consolidating, are doing more direct advertising, where we're happy to help our customers here in how to effectively do that. We have very successfully rolled out the new femtosecond laser platform, VisuMax 800, and we're beginning to see good traction for our refractive business, including, by the way, also the already established presbyopia solutions for middle-aged patients in the European markets. And last but not least, the US. In the US, we also, similar to Japan, have an important portfolio gap, which is in the cataract space. And cataract and with our intraocular lenses, we are not yet present on a major scale in the US. For many years, the reason was Alcon's very strong presence and dominating market share in the US. However, we now have, since 2023, the first FDA-approved Zeiss lens, and we are in a registration program where we also expect multifocal lenses to reach the US market over the next 2 to 3 years. This will help us, together with our already heavily used surgical microscopes and with the addition of our retinal surgical offerings to the acquisition of the Dutch company DORC at the end of 2023, which has a sizable US customer base, as well as our good position in diagnostic imaging and also biometry and cataract planning equipment in the US, to basically put these different pieces of the offering together to an integrated architecture that will be highly attractive for US cataract surgeons. While things are not moving super fast in terms of registrations and some patience therefore is required until the full offering becomes available, the opportunity is very large. The US has a $2 billion per year cataract market that we barely cover right now, where now the doors are slowly beginning to open for Zeiss. So this is an exciting new field. And putting these together, you can assume there's a lot of growth potential for the business in the next years to come.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. C11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.